All right, traders, welcome back. Today, we're diving into something that honestly is a total game changer. It's called multi-timeframe analysis. And if you've ever felt like you're fighting the market and you have no idea why, well, this is for you. So let me ask you a serious question. Are you trading with one eye open? I mean, really? Because if you're only staring at one chart, one single time frame, you're missing like 90% of the market story. This is where so many traders get tripped up. I call it the single chart trap. They'll just lock their eyes on, say, the 15-minute chart, and every single decision they make comes from that tiny, narrow window. It's such a classic mistake, and it leads to missed opportunities and, honestly, a lot of really bad trades. And this analogy is just perfect. It's like you're dropped in the middle of a huge city, and you're trying to find your way around by looking at one single street sign. It's impossible, right? You have no clue if you're on a one-way street heading for a dead end or if you're just one block away from the main highway. In trading, that kind of tunnel vision is exactly what gets you stopped out by what feels like random market noise. Okay, so how do we fix this? How do we open both eyes and actually see what the market is trying to tell us? Well, the answer is multi-timeframe analysis. This is the tool that gives you that complete, high-definition, crystal clear view of what's really going on. So what is it really? At its heart, it's super simple. We're just looking at the same stock or the same currency pair or whatever, but across a few different time frames. The whole idea is to figure out the dominant, big picture trend on the higher charts, and then zoom into the smaller charts to absolutely nail our entry. Let's go back to that map idea, because it's so important. You would never, ever plan a big cross-country road trip by just looking at a zoomed-in view of a single neighborhood, right? No way. You'd zoom way out to see the major interstates first, then you'd zoom in to navigate the local streets. Trading is exactly the same. So what's the big payoff here? Why should you bother? Well, a few huge things. First, you get trend confirmation. This ensures you're swimming with the big institutional current, not trying to fight against it. Second, your timing gets so much better. You stop getting faked out by all those false signals that look so tempting on a small chart. And finally, your risk management gets a massive upgrade. A stop-loss placed based on a key daily support level, that's a fortress compared to one placed just under a tiny 5-minute wiggle. All right, theory is great, but let's get our hands dirty. How do you actually do this? I'm going to walk you through a simple but incredibly powerful 3-step method that you can literally start using the second this is over. And it all comes down to the number 3. We're going to use what's called the rule of 3. This gives us everything we need, the big picture, the intermediate setup, and the precise entry without drowning us in data. It's simple, it's easy to remember, and man, it is effective. So here's the game plan. Step 1, you start high. Pull up your daily or maybe your 4-hour chart. All you're doing here is asking one simple question. Are we going up, down, or sideways? That's your overall strategy. Step 2, move to the middle. Now you drop down to the 1-hour chart. Here, you're looking for tactical setups, like pullbacks or patterns that line up with your big picture trend. And step 3, find your entry. Finally, you zoom right into the 15-minute chart. This is just for execution. This is where you pinpoint that exact moment to pull the trigger. Let's run through a quick example. Imagine we pull up the daily chart, and it is just screaming uptrend. Higher highs, higher lows, it's super obvious. So what does that tell us? It tells us the big money is buying. So our job, for now, is to think like a buyer, and only a buyer. Okay, so with that buy-only mindset, we now drop down to our intermediate chart, the 1-hour. Our only mission here is to find bullish setups. We're on the hunt for things like pullbacks to support, or maybe a classic bull flag pattern. We might see some bearish signals, sure, but we just ignore them. They don't fit our top-down plan. And finally, we get to the fun part. We zoom into the 15-minute chart. The moment our 1-hour chart gives us that good-looking buy setup, we use this little chart to find our exact entry point. We're looking for that one specific bullish candle, that little pattern that tells us, okay, the dip is over, it's go time. And that is how you time your entry with precision. So now you have the method. But just like driving a car, you gotta know the rules of the road to do it safely and consistently. Let's cover the essential do's and don'ts right now. All right, listen up. These are the pro tips. First, just stick to 3 time frames. Don't try to watch 7 different charts at once. You'll just drive yourself crazy. Second, keep your analysis simple. Focus on price action, support, and resistance. The most important rule of all, always trade in the direction of that higher time frame trend. And finally,
Place your stop losses based on key levels from your bigger charts. They're way more reliable and harder to hit.
And this chart makes the difference crystal clear, doesn't it? The common mistake is trying to fight the big trend. The pro move is to align with it. Beginners will just plaster their charts with a dozen indicators. Pros focus on clean, simple price action. And beginners get lost in the noise of a 1-minute chart, while pros always start their analysis from the top down.
We've covered the why, the what, and the how. So now it's your turn. It's time to put this thing into action. Here's how you can do your very first multi-timeframe analysis tonight.
And just remember this, multi-timeframe analysis isn't just another fancy technique or indicator. It is a fundamental shift in how you see the market. Getting this down isn't just a game changer, it is the bedrock of disciplined, consistently profitable trading. It's the real deal.
So what's your first step? It's super easy, and it's completely risk-free. Pull up a demo account tonight. Pick any stock, any currency pair, whatever you like to trade, and just practice. Analyze it using the 3-step method we just covered, the daily, the 1 hour, and the 15-minute. Don't even place a trade. Just look and see how your entire perspective changes.
And that leads us to the final question I have for you today. When you open up those charts and look at them with both eyes open for the very first time, what will your first analysis reveal? You might just be shocked by what you've been missing all along.